Okay, hi everyone. I think we're live. I'm just double checking, refreshing my feed. Give me one sec. Okay. All right. Hi everyone. Welcome. We are just getting started for a very exciting presentation today. I'm Adina again from Immigrant Finance. For those of you who are new to this group, we're playing this live in the Facebook group. It's also going to be on the Immigrant Finance podcast later. So if you're listening on the podcast, hello, thanks for joining. And we have a very exciting presentation today to learn all about taxes, specifically business taxes, when you are a new online business owner or just starting a new business. This is a topic that we've gotten a lot of questions from. There's a lot of confusion in the community. So we're very fortunate to have the expertise of Mayur Vyas, who's here to join us today. He's a CPA, so he's an accountant and knows a lot about this stuff and is going to be sharing his wisdom with us, answering questions. So if you are listening, go ahead and comment below, say hi so we know who's here and we can engage with you, ask questions as we go. We're really excited for this presentation. And with that being said, I'll let you introduce yourself. Go ahead if you want to say a few words.
Sure. Yeah. Thanks, Adina, for having me. Excited to talk taxes, which is most people are not, so I enjoy that part of it. Yeah. I mean, my background is actually in finance originally, and then I became an accountant by accident, just by virtue of working for a large firm for like over 10 years, and before that, I worked for some tech companies. Finally went solo after a little while, and then I've been doing it. I have a business partner now. We have a staff of 7, and we work with almost exclusively entrepreneurs, small businesses, often with folks who originally did not, it's like a lot of our clients are business owners who started their business, not really having, kind of dealing with, we'll get to the taxes stuff later, which is fine. And at a certain point, they realize, okay, we need to get on board. And that's kind of how our business started. So we work with a lot of people who went hard and then realized they need to clean everything up afterwards. So I know a lot of stuff of what not to do. So I'm happy to talk about those things today.
Got it. Okay. So having our community learn about what to do in the beginning is a good thing then instead of having to clean it up later when you haven't been thinking about taxes, it sounds like.
Yeah, I know. The laws keep changing, especially these days with, the last 3 years of extreme tax changes. This last year alone with all the CARES Act, and then the one they just passed in December, and we're going to have a new administration tomorrow. So there's going to be more changes. So yeah, whatever high level stuff we can talk about, and maybe some predictions of what might happen this year. We'll get into all that stuff. Yeah.
Awesome. Great. Well, just to get started, let's talk a little bit about your story. I know that you come from a family of immigrants and your wife is an immigrant. So I'd love to hear just a little bit more about your connection to the issue of immigration and your family.
Absolutely. Yeah. I mean, yeah, my parents came in the 70s, a while back. Both of them had, my dad especially had his 9-to-5 job. He was originally a student, and then worked a 9-to-5, but he always had some sort of side hustle going on. Because it's just one of those things that they want to keep, as like at a certain point, you just kind of like, you have that drive to do something different. So that's my dad. But I would say my mom was the true entrepreneur. I mean, she didn't really speak English. She came here from India with my dad, and she actually got like some retail jobs, learned English, Sesame Street and stuff. She side hustled she actually did her own like hairstyling salon type stuff for years, and finally went solo, opening her own salon, and showed me so I really saw her work her butt off and to make her stuff successful. They're both retired now. I still take inspiration from them, while not directly. Like I mentioned, I worked in corporate world for 15 years doing this business as a side hustle, which I just mentioned. It was my wife essentially who was a H-1B worker. She's been here about 10 years now, and she worked crazy 14-hour days. That's just the nature of having no workers' rights being an H1. Despite all that, she still obtained her doctorate and an MBA despite the challenges. While she has her own story to tell, it was her who convinced me to go solo and to truly pursue this, becoming an entrepreneur myself. Yeah, and so anyways, made it official about 5 years ago, and quickly learned that startups can't pay the mortgage, and that's what I explained to you. Our business expanded. My business partner, he's also immigrant from Taiwan. Most of our staff are immigrants. We have a few H1 folks ourselves, and yeah, I like surrounding myself with people who just love to. Here's what we have, and just because you're officially a citizen or something doesn't mean that okay, you can coast. Hey, we still have that hunger, we still have that drive, and that's what a lot of our clients are, and it's just exciting to be engaged with so many people like that. Oh, I think you're still on mute, Adina.
Right. It's so great to hear how the entrepreneurial spirit of your parents as immigrants and your wife has impacted you and your business, and even your business partner. It's so exciting. Sorry, I'm not sure why this random number keeps calling me. I apologize. Yeah, and it's been really great to connect with you. I know that a common colleague of ours connected us, and when he heard about what we were doing in immigrant finance and your experience with finances and having immigrants in your family and your business partner. So it's been really nice to have this connection and have someone to reach out to who can talk about taxes, who understands actually what immigrants are going through, and specifically immigrants interested in becoming business owners. So we're just really grateful for your time here today and enlightening everyone with your experience. And I see we have a couple of people coming in. If you're here, welcome. We're here to talk all about taxes for new online business owners. Go ahead and say hi in the comments so we can give you a shout out, and feel free to ask any questions that come up for you as we're chatting. Great. So you told us a little bit about your connection with immigration issues in your family, starting your business. Tell us about how it was building a business on the side while you were working full time, because that's what a lot of people in our community are considering as well.
Yes, definitely. It was definitely difficult. Because the work job I had was a consulting job. You work pretty long. 12 hours is like an average. It's often more than that, and there's travel involved and all that good stuff. It really just kind of, to be honest, it wasn't. There's no way it could have. There's no perfect solution way it would have been. It was just kind of like, hey, you have a free weekend, you have a free evening. I mean, that's really when the work would get done. When you're still working somewhere, it's hard to do business development in many ways because you're really relying upon friends, word of mouth. Those are my first clients too. A lot of it was pro bono too. It was former colleagues, coworkers, even some former clients who were off doing their own ventures. And it was more like, hanging out. Back then there was no Zooming. We all chill hanging out in person, right? It would come up over a beer or something, and then that's where we're like, okay, let's actually discuss this properly. And then we set up a call, or we meet up at someone's house and kind of go through things. And that's really how my business started. Yeah. To answer the question, it's hard to balance it, especially if you're working like most of us are, unreasonable amount of hours these days stuck at the computer.
Yeah, and sometimes it's just the only option, right? I mean, to take that financial risk to start a business, it's nice if you can have a salary, giving that stability until you can get it built up, start building clients. So that's good to hear about how you would find your first clients, and that led to having a successful business today. Well, let's go ahead and jump into this topic of taxes for new business owners, particularly in our community, immigrants and their family members who are thinking about starting online businesses. So just to start out, someone who has never had a business before, they've either only worked for an employer, or maybe they've only been like a contractor or a consultant for themselves. What is the first thing they need to do when it comes to taxes for thinking about starting a business?
So yeah, first thing is this may not even be accounting or tax related. Like you first should determine like, is this a viable thing? So like, so here's the ridiculous thing. Legally, if you make over $400, you're required to report that to the IRS. And even if you make under that, they still want you to fill out a, report. You still want you to report that income. That's an old law going back to the 80s, which they need to update, because back then, even $400 wasn't that much, but it's nothing now, right? So the type of business you have is going to depend on what do you want to do with the business. Like when you create a business, you have to think 5 years in advance, which I know is very hard. It's hard to see even 1 year when you first start a business, even 6 months, how this is going to be. The reason I mentioned the 5-year part of it is because this is the legal entity discussion. Are you going to, we'll get into the details here, but are you going to be a sole proprietor? Are you going to be a partnership? Are you going to be like a C corporation, an Inc.? Like, let's say you're going to exit like like these tech startups, if you can be bought out by someone someday, all those things. All this is important because this is the legal question, Adina, you and your group can answer, because if the legal entity is the foundation of your business. Everything grows out of that. Like you have the soil, right? And this is the ground part of it. And if you don't have the right thing from the ground, like your whole business, it won't crumble, but it's kind of a pain in the butt to have to convert to a different type of entity. Going back, you have to refile other tax forms. You have to get new EIN numbers. There's all sorts of things that are a headache. So the first thing is just kind of figure out what is your kind of 5-year plan at a rudimentary level, and then you can create the right entity.
Okay. Right. And let's say you forget to think about creating a legal entity, or you're just overwhelmed and you avoid it, whatever. Can you operate as a business without any type of legal establishment? Can you just start selling things and providing offers, making money? Is that legal even?
Yes. So yeah, that's a good point. Not everyone is gonna. A lot of businesses fail, right? And that's a sad reality. So it's not the government doesn't necessarily expect you to create some entity right away. That's more of a legal protection thing, and it just makes it easier later on. But yes, if you see a viable business opportunity, especially these days, you can sell things online, goods, services, everything, like from coaching to drop shipping to everything. There's a lot of things available to folks to make like a side hustle. You don't have to create a legal entity. The easiest one I'll just mention is the LLC. That's the simplest one. So you can go and do it. The 1040 is the standard tax reporting form we all are used to. If you file taxes in the US, you've done the 1040. Schedule C is the where you're going to report your income and expenses from this business, this simple business we're talking about. So yeah, you can get started and report on your Schedule C. That's not a problem.
Great. And talk to us about the difference between Form 1040 and Schedule C. Do you file both? How do you know which one to file?
Correct. Yeah. So think of it like 1040 is like the book. This is like the taxes. Schedule C is, let's say, page 3 in that book.
Okay.
So Schedule A is the itemized deductions. So like people who own a house or you want to itemize their deductions, they use Schedule A. And then, by the time you get to Schedule D is where capital gains, all your stock and bond selling, all that things. Schedule C is your business income. So it's part of, most people don't bother to fill out Schedule C because if you're in TurboTax and you have your W-2, you're literally just like entering your numbers from your W-2, which your employer gives you. And then you're covered for your 1040. But if you have a business, you're going to have to fill out that Schedule C, if that makes sense.
Yeah. And if you are a W-2 employee, so you work for an employer, but you're also doing some side hustle online, can you file both?
Yes, exactly. You can and you should. So W-2 taxes, it's a payroll, right? Like, you have your paycheck every 2 weeks or however often you're getting paid. Your employer is automatically withholding all your taxes from each paycheck based upon what you filled out on your withholding, your W-4 form. With the Schedule C, business income, there's no tax being withheld on that. So you're responsible for that. You want me to go into that now or save that for later?
Let's build up to it.
Yeah, I was going to say that.
Yeah. Okay, but no, this is really helpful. And so, yeah, you mentioned the LLC, you mentioned that you don't necessarily have to have an LLC to make money and start a business. So if you don't file an LLC formation yet, you're just making money on your own, there's no structure to it. That is when you're a sole proprietor. So what does that mean? How'd you explain that to our community, what a sole proprietor is?
The simplest way to describe a it's just a self-employed individual who runs their own business, which isn't registered officially, but is still recognized in terms of like the IRS or any state taxation authority will recognize a sole proprietor as an income generating, and it's not really an entity, but I think the biggest distinction is with an LLC, you are assigned what they call an employee identification number, EIN.
Mhm.
With a sole proprietor, you're essentially just doing business under your own name. You're
Yeah,
or AKA a DBA, doing business as under your social security number.
yeah,
So on that Schedule C at the top, it asks like it'll ask for EIN or SSN. If you have an EIN, you put that. And that's the LLC part of it. But if you don't, you just put your social security number. So that's now IRS knows you're a sole proprietor, and everything that you're going to report below that, your income and expenses, that's going to just flow through to your personal taxes.
definitely. Yeah. And I would just add for folks in the community who don't have social security numbers, you can use something called an ITIN, individual tax identification number, which you would be using anyway for filing taxes. And is that correct too? You can use that to be a sole proprietor.
Right. Yes, exactly. Whatever your assigned government identification number is, and yeah, it's the ITIN
Yeah.
or SSN. Yeah.
So it's like you've got your ID number, it's either the social security number or your ITIN, or if you filed as a business, such as an LLC, you've got your employer identification number, EIN, and would file under that. So that's kind of how you figure out what structure you're under for taxes, right?
Correct. Yep.
Okay, great. So we got that figured out. So we know that like you could get started even if you don't have an LLC, just operating as a sole proprietor. At what point do you know when to file Schedule C? Because I know you mentioned like after you're making $400, you're supposed to report it. Is that the threshold when you should start attaching Schedule C to your taxes?
So it depends on the net income, I think.
Mhm.
So net income meaning all the money you make minus all the expenses. So whatever your net income is there.
Yeah.
So let's say like a coaching business, for example, right? You're going to have revenue from your clients. I guess they'll pay you through either PayPal or Venmo or some online, even Zelle, some people use.
Mhm.
So there's going to be a record of that now. Your bank or PayPal or something has that record of it. So now if the government really wanted to find out about it, they would. So it's like
Yeah.
very few things are done through cash these days. So
Mhm.
the old days of the mafia exchanging money isn't working in cash. So
Yeah.
you have a record of it, digital record of it. So that's going to be reported. So you should start to track what expenses are put against that. So let's say you'll have maybe a website fee, maybe
Mhm.
some different software subscriptions. If you invested in like on a G Suite or what do you call some sort of email server, all those little expenses um, you should be tracking. So
Yeah.
based upon that, if your net income, I can't really say a dollar threshold legally. If it's over $400 after the net income, you should be reporting it. So, but I honestly think most people don't really bother to do that. I think there's a report that came out only 36% of self-employed people don't report their income, because I think the reason is because it's just so small.
Mhm.
It's Even if they were to report it, it would make a negligible impact on their overall financial situation.
Mhm.
Uh, yeah, I think that's the long-winded answer. That I think, I mean, if legally you're supposed to do it over $400.
Yeah.
Yeah.
So it's like you should, but not everyone does it. And maybe the IRS isn't most likely to go after people making like $500 net, but we don't
Yeah,
know.
I mean, there's a time cost for them to go and audit
Yeah.
everybody, right? Like, so they'll, if like, IRS, they're just regular work, workers too, right? So they're going to try to find where they're actually going to make an impact. And if you're reporting, a more likely example for them to really care is if you're making, like, let's say 10, 15, up to 50,000, and then your expenses are maybe 5 to 20,000, right? So your net income ranges from, like, I don't know, 15 to 25,000 or something.
Mhm.
They may take a look at that just to make sure, because
Okay.
that's enough net income to change your tax bracket.
Yeah,
That's something they're going to look at. Like, are you just kind of playing? Are you like really fudging these numbers to move your tax bracket, or is that actual business activity?
definitely. Yeah. And I mean, I would just add, for our community, we're encouraging so many of you to learn how to increase income for purposes of building wealth. It's really the best way to be building wealth, investing, increasing income so that you can invest more too. And talk about how online business is a great way to do that. So the goal isn't just to make $500 a month or 400. It's like to get to that point you're talking about where you're having that like 10, 20, $30,000, and you're going to need to be filing taxes in that case. So might as well figure it out early, get the system set up so you don't have to deal with problems, right? And just
Mhm.
have everything set up. So I'm glad we're taking time to learn today. And if you're listening, that you're investing and learning about this time, in your time and learning about this. Um, Great. Okay. So,
And I would add to that too. If they have it, if you're gonna try to, a lot of people say, like, I've heard people like, well, I had all these startup expenses that I used to, like, get my business off the ground, but I'm just gonna go and start reporting those.
mhm,
And that's allowed, but I would be careful to do that unless you have some income to show for it.
yeah.
So that's, because a lot of people have startup expenses, but they haven't made any money. It depends on how early in the year. If it's like late in the year, it's allowed, I think, because it's justifiable that you just started the business. It's hard to
Right.
do. But if it's like, if you made a bunch of startup expenses in January and February, and here we are in December, you still haven't made any money yet, um, just check with a professional before, depending on how much is going to be expensed, before you just expense it.
That's a really good point. Yeah, you want to be making money. That brings up deductions. I think that was something we wanted to talk about too, and would love to hear your thoughts more. From what I've learned, it's a really great way to lower your taxable income to be able to write off expenses in your business. So yeah, what would you recommend on that topic?
Yeah, I mean, the U.S. tax code is based upon getting deductions, especially business deductions, because they have their own, like, their own schedule. They're independent of some of the other things. So, of course, it's reasonable and valid business deductions. Some of the most common ones are rent. These days, I mean, most people are not spending money on an office. Even our office, we downsized significantly. Um, so if you're working from home, which I think is the case for most people, um, what people do is, like, they generally prorate. There's like a deduction that IRS called, like, I need to figure out the exact calculation, but essentially you just take the square footage of your working space in your home and multiply that by a certain number, and then most people were able to deduct a couple hundred from their on their taxes just for that. If you work um, so other ones would be, like I said, mentioned the software subscriptions. That's valid. If you purchase a laptop or a device like a phone or something, let's say you're recording things, um, this is where you have to, what they call, calculate your business use of that product. So, which is hard to do, I know. So the IRS allows some safe harbor for you to kind of guesstimate it. I would just tell people, like, keep like an estimate of, like, let's say using that uh, business mixed use device, 25% of it for business. So basically the cost of that you can expense 25%. This is more for the phone. I think for laptops, that's justifiable business expense in most cases. You can just deduct that wholeheartedly.
Yeah, and there's also things like printers, I mean, gas if you're traveling for your business, right? Like travel costs, meals that are business related. There's a lot you can put down for business deductions.
Yes, that's true. Yeah, I need to get into those detailed ones. So I mean, I'll say the mileage one. There's a standard mileage that IRS allows two ways for you to expense. I would just, there's the actual method versus the mileage method. I definitely recommend the mileage method because the actual method, you have to track every little thing. And unless it makes sense if you have the capacity to do that. But the IRS just said, look, here's like the standard mileage rate. Just track how many miles you drove your car for.
Yeah.
There's a purpose, just multiply it by that. People can deduct a couple hundred from that usually. And then meals, I wanted to add, because of that December law that passed, their IRS is allowing, it used to be you can only deduct 50% of your business meals. They're allowing 100% of business meals just for 2021 to encourage people to go and spend money on takeout and these struggling restaurants.
Okay, interesting. And will we make sure I'm explaining this right to our community? So, in my understanding, the reason why writing down business expenses and putting them in your tax reporting is so great is because it lowers the total amount of your business income that you're paying taxes on. You pay taxes on like basically the money you make minus the expenses in your business. Is that right? So you're paying like less taxes overall on the money you made?
Correct. Yes. So let's say you make 10,000 on your side business, and then and when you when you're a W-2 worker, you think like, oh man, I got to pay taxes on 10,000. I didn't anticipate that, but that's where the deductions come in. So all these things we're talking about, which are reported on the Schedule C, those are all expensive. Let's say you can get them down. You have maybe 3,000 business expenses. So then you're only paying tax on the 7,000.
Mm-hmm. Exactly. Yeah, and that's a huge advantage that business owners get in the tax system, and is another incentive for entrepreneurship and having a business as a way to build wealth. We've had a question come in. I'd like to read if that's okay. Nina, thanks for being here, Nina. Nina asked, can you give a crash course on how to get started on reporting taxes for the first time as a business owner? Parentheses, what info do we need to consider, etc.? What are the pros and cons for being an LLC versus sole proprietor? Sorry if these questions are so elementary. I'm super new to this.
Oh no, those are very important and targeted questions actually.
Yeah.
Let me answer the LLC question first because I keep mentioning it. The benefit of an LLC is I mentioned legal liability, but that doesn't help much. It's that EIN number. If you're trying to get like a bank account set up for the business or a credit card, or the bank will require an EIN number, which is associated with the LLC. Other things with the LLC is if, let's say, you want to hire someone to work in your business, in order to establish like a payroll, you generally need an EIN number. Even if you want to hire contractors to help with kind of ad hoc things here and there, having the LLC pay them is so much more clean, if you will. It's like they will say, like I think it was Mitt Romney said years ago, that corporations are people. So it's like that EIN, the LLC, is essentially another person that
Right.
that you own. Sounds weird to say it like that, but there's just some clean. It makes it distinct in the terms of the government and other banks and the financial system in general, when you have a separation between you and the business.
Yeah.
So
It's like they're responsible, not you, for everything related to the business. It's not on you. It's on the business.
it is, yeah. I mean, if something really bad happens, you're still on the hook because you're the only owner of that LLC.
Yeah.
But at least you're able to get some limited liability protection. So,
Yeah.
um, the other question she had was, how do you get started? So let's say let's hypothetical example. Let's say you started a business in 2020, like sometime last year. Let's say it was March. Let's say you started to make money in September, but you had some upfront costs, throughout the summer. So by year end, you had about $1,000 net income. So that's what's left over after, like, your profit minus expenses. So this is the first time you're going to have to be doing a tax return for 2021. So you're essentially gonna, if you're using a TurboTax, I use that example a lot. When you go through the wizard, it asks, one of the questions it asks, did you start a business this year? and then you say yes, and then it'll open up the wizard and it'll ask you to enter, okay, what's the income from that business? And you put that there. And then it'll ask you what expenses for the business, and you enter those. And then it'll automatically generate that and put that to the front of it. That's the very simplistic example if you're just starting. Like, I think the question inherent in that question was, is there anything you need to do before you start making money? And the answer is not really. I think you need to start a business and get it going, and then you start reporting it.
I appreciate you saying that, because that's a big fear people have. I've heard that they're afraid to experiment with business because of all this unknown tax stuff. And so you all just heard an accountant say there's not really much you have to do with taxes before you start making money. It's like that first year that you started making money, in this case, net over $400 at tax time. So the next April it's due is when you have to figure this stuff out, right?
Mm-hmm. Yeah. So, like, I mean, December 31st, you start to, enjoy your New Year's party. And then the next few days, that week, just go and close the books and see how much you actually made. Like, let's say flash forward in 2022, that same individual in this example who started their business in 2020 is now making, 10,000 net. So that's after tax, after the deduction, after expenses. Sorry. Now you're at that point where it's going to be a shock to you if you just follow I'll just file it April 15th. That's when a lot of entrepreneurs get shocked, like, oh my God, I owe all these taxes. I don't have like this money sitting around. That's where the concept of the quarterly taxes comes into play. So if you can reasonably forecast that you're going to be, owing that, making that kind of money, you should, every time you get paid, you should just kind of set aside somehow, maybe 20-30% of that income to pay in taxes. And what the IRS wants you to do is pay that quarterly to them. There's like it's not that complicated. You just have to go to the IRS website. There's like a form you fill out. I'm sure we can send some links, Adina, to the.
Yeah.
But yeah, that's kind of getting ahead, but that's when you pay it quarterly. I think a lot of people freak out. They're like, oh, I need to pay taxes quarterly. I don't even make money. It's like, if you're not making money, you don't have to pay, unless you want to, because then you'll just get a refund for all of that. But you need that money to build your business. You don't need that money to give to the IRS for no reason.
Definitely. Yeah. So you're only paying the quarterly taxes if you're making money. So it's kind of like more money, more problems. People say, like, this is stuff you only got to worry about if you're making profit, which is a good problem to have. And we can help you with that, and figure that out once you get there. Like, just get started to begin with. But the quarterly taxes, yeah, how do you figure out exactly how much to send each quarter? And you do state and federal, right?
Yeah, exactly. That's a good point. Yeah, state and federal. So there are official calculators on the IRS website, and I think you can just honestly Google, like, how much do I need to withhold. Rather than overdo it, that just, like I said, just keep maybe like if you get paid from a coaching client, $500, I don't know, just keep about 100 of that, in, like, just, you don't have to keep a separate bank account or anything. Just keep it, like, just maybe mark it on a spreadsheet that, like, $100, this is saved for taxes when I have to pay them.
Mm-hmm.
That's just like a simple way to do it, just so you're not surprised when you actually file your taxes.
Yep, definitely. Great. So we've talked about LLC versus sole proprietor. We've talked about Schedule C. We've talked about quarterly taxes. Is there anything else you wanted to cover before we get to resources for how to get help with taxes? I know we have a question in the chat on that as well.
Oh, okay. Yeah. Let me see. So yeah, I took a few notes here. So I know we talked mainly about sole proprietorship and LLC. There's also some considerations when it comes to partnerships and S corps and C corps. I'm not sure if anyone in the audience is doing this. I think maybe the partnership might apply here.
Yeah.
Partnerships are essentially they're like LLCs, but they have more than one member in the LLC. So when you create an LLC, it asks you who's the member, any of the members. In this case, it's just you put yourself in partnership. You put yourself and some other people. That's great, but you have to, now there's another level of compliance and there's a whole other set of tax forms you have to fill out. I don't think we have time to get into all the details of that, but that's just something to consider when it comes to that. Same thing with the S Corp. S as in, it means subchapter S of the IRS code. That S, that's another tax form for that. And then a C Corp, which is by far the most complex, which is very popular for companies like startups who intend to get bought out, or they want to issue equity or shares easily. That's what that's for. I think the purpose of this conversation is mainly sole proprietors, solopreneurs is either just a sole proprietor, which is reported under your ITIN or social security number, or LLC, which is under your EIN.
Great. Yeah. And is there any reason why someone starting an online business for like coaching, courses, drop shipping kind of thing, Etsy, any reason they should think about S Corp or C Corp?
Not really. S Corp maybe, but only if you're making a lot of money. Like if you're making 6 figures or even high 5 figures, like 70, 80,000 in something like that, you can possibly justify S Corp. S Corp is not a different legal entity. It's just a designation. You have to be an LLC, first of all. And then you basically write a letter. It's like a form you fill out and you send to the IRS, says, I want to be taxed as an S Corp. What that does is it helps you to deduct half of your self-employment taxes, roughly, as an S Corp. But the caveat is you have to put yourself on payroll as someone who's active shareholder in the business. And you have to pay yourself what they call a reasonable compensation, which is a high audit target by the IRS. So if you were not making enough to do that, then I wouldn't advise bothering with the S Corp election. Just stick to the, LLC or sole prop, report on Schedule C. Yeah, that's what I would recommend.
Definitely. We had a question. How much does an online business have to make before it is mandatory to file taxes and report the income?
Yeah, so like legally it's $400.
Yeah.
And I know
Net.
that, I'm sorry?
Sorry, net.
Net, yeah, exactly. Yeah, yeah, exactly. If it's net, if you made less than that, if you got $400 and then you spent $300, meaning you had $100 left over, I mean, like legally, I have to say you have to report taxes, but it's such a small amount. I don't see that really being an issue. Like I'd say just continue growing the business and try to get, double, triple that. And then I think it makes more sense.
Yeah. Yeah. Hope that answers your question, Nina. And then we had Claudia ask the question. Hello, I have a question and looking for a tax professional. Is there a search engine to make a search or a best way to choose a professional? Are there certain questions we should be asking when looking? Thank you.
Yeah, there's lots of like find a CPA or find a accountant type things. I, I'll be honest, I haven't really used any of them. In our network, we rely on other CPAs just because we all know we know we all work together, know each other's stuff. It's really hard to recommend like a search engine to how to find someone. I know, like in TurboTax and some H&R Block, like they have, I think, accounting or tax experts to answer questions. I haven't used them myself. I hear that's fine. I had a few colleagues who actually did like that service, just kind of like as some side money. A lot of these are like retired CPAs and things who just, a couple $100 every month, every week or whatever, depending on how much volume they have. But I'm sure, sorry, I can't recommend, I don't know how they are myself though.
Yeah, and with a lot of these things, it's the same thing with finding an immigration attorney, where word of mouth is going to be really important, and like reputation in your local community, talking to other people who've had good experiences. You can look on Yelp and see reviews, always make sure the person's licensed. I don't know if there's some kind of like license as a CPA people tend to have in their office, like a lawyer would have.
Yeah. And so like in for it's a little different in the tax preparer. So there's different levels. Like CPA is honestly it's a little overdone. Like a lot of CPAs don't even do they're nothing to do with taxes. They do audit, they do like SEC compliance, all sorts of things. Um, the your better options are EA. It's enrolled agent, which is someone who's licensed specifically by the IRS to prepare and give tax advice. There's also licensed tax preparers, which is I think is done by some independent nonprofit. Um, and I think those are the designations out there. And then to even like file taxes on behalf of taxpayers, you do have to have, certain what do you call it, PTIN numbers, paid tax preparer. I forgot what it stands for. I have a PTIN, but I don't know what it stands for. But that's like what the IRS requires for you to even file taxes on behalf of anybody.
Okay, so that's helpful to know that they have to have that number to be able to file. We were emailing earlier about how the IRS has the Volunteer Income Tax Assistant or VITA program, and that's a program where you can get look for free tax help. It's generally for people who make about $56,000 or less, is what I saw on the website. People with disabilities, taxpayers with limited English. So you can just type in VITA IRS and a website will come up that shows you like how to find one in your area. So that can be helpful as well. But I know you were giving a tip too that like that makes more sense if you have a simple financial situation.
Yeah, I think so. And when I say simple, it's so what some people consider simple is just the W-2 income, or if you're like, someone with a fixed income, like a lot of retirees use that service as well. But I think it might even apply to some of the folks on the webinar too, because your business is simple enough where you really have one revenue stream and then a simple set of expenses. So that's I'm not sure I'm not sure how it works. So when you register, but they might be willing. I think they would still be able to help. Yeah.
Awesome. Great. Well, if anyone has any final questions, please go ahead and put in the chat before we wrap up. And just in the meantime, I think from what you've shared, it shows that this doesn't have to be something super scary and overwhelming. Taxes should not be a reason that you should avoid starting a business. Like it's something to just figure out once you're making money, which is a good problem to have. Anything you want to add on that so that people don't hold themselves back because of taxes?
I'd say just two rules of thumb I keep to when I speak to new entrepreneurs is like, one, only spend money on things that will reasonably be revenue generating, like sales, marketing, maybe hiring a contractor that will help you out with something. If you're big enough that you have someone who's actually doing work that is revenue generating, like a billable type thing. And and when it comes to like the business cycle, the cycle of a business throughout a year, I'd say devote the first 9 months to making money. Don't necessarily worry about taxes as much. Do try to set aside that 20, 30%, but devote 9 months to making money. While you're doing that, do identify expenses that are useful but not immediately necessary. And then the fourth quarter, October, November, December, as the year is wrapping up, start to look at your situation and then say, okay, if I made a lot of money, like that 10,000, for example, like, okay, now focus on spending all those things that you identified earlier in the year, but weren't sure about at that time. Now is the time to go ahead and make those investments, because one, sounds like these things you had done enough research on, you see that they're justifiable, that they will help you make money in the business. And two, you get those as tax deductions or business deductions on your Schedule C.
Yeah.
So it's win-win. And then come January, your business will be in a good place to start fresh, and then follow that cycle every year.
Totally, and that helps you keep more of the money that you make while you're also investing in the business. And you just made some really really good points. I want to underscore more this idea that like focus on what's going to make money. I think a lot of new business owners get caught up in all the stuff that people are telling you online you have to do, like social media and all of these things that can kind of be, they're important, but they can be distractions, or like maybe not necessarily going to directly lead to money. Like just because you have a lot of people following you doesn't mean you're making money. You have to have an offer, you have to be selling, you have to learn the skill set of selling and focus on making profit. So thank you for giving that advice. And then I just love the idea you emphasize of the business deductions and expenses, and this idea of how important it is to invest in your business too, so that it can continue growing and growing. Any thoughts on like why it's so important to invest in your business in order to make more money? Like, because you have to kind of flip when you're a business owner, spending money to make more.
Yeah, I know that there's the old saying, right? You have to spend money to make money, and that's true when it comes to direct costs, like things that are going to be revenue generating. Um, but when it comes, a lot of people. I was talking to someone the other day that they were new at this and everything. They got, I felt bad for them, but they kind of didn't understand, and they invested a bunch of accounting software, like $2,000 worth of accounting software, and I was like, what money do you have to account for? you
Yeah.
know, that whatever, so that's not necessary. Like people, the QuickBooks, a lot of people say, I need to get my QuickBooks so I can keep track of my accounting. I was like, when you're this early on, you just need to keep a spreadsheet. It's not that
Totally.
difficult. Do keep all your receipts. Like that's a typical CPA thing to say. And
Yeah.
these days it's so easy. Just everything is in PDF or it gets emailed to you. So just keep a folder on your computer or on your inbox that's this. So that's it's so easy to keep receipts these days. But yeah, exactly. So just spend money on like things that will make you money.
Yes. Always ask, is it going to make me more money?
Yeah.
And we have one final question for you, and then we'll let you go. So Rafael asked, at what point should a business owner consider looking for a CPA?
I think when it gets more complex than you can handle,
Yeah.
because there's a certain point when you're having like multiple like revenue streams. Like maybe you'll have a coaching business, but you also have other like a drop shipping, or maybe you've taken money you've made in your regular job and bought real estate, and then starting to do what's the word, Airbnb or something, or there's some people who are Uber drivers. I actually have a client who's doing all these things,
Wow.
and this guy he just loves working. He's from Egypt. He just likes working. So anyway, so he has all these different revenue lines. So now he has like I think 4 or 5 revenue streams and different costs for each of those. So keeping track of allocating costs against all of those is kind of a nightmare. So he definitely needs our help to keep track of the bookkeeping,
Yeah.
keeping track of each of these different revenue streams. So when he reports on his schedule, he has multiple Schedule Cs in this example that we have to report. And each of those expenses have to be categorized accordingly. So when you need help, cleaning up your books, cleaning up your situation, making sure that you're correctly, you have each business in its own column that's
Okay.
reported in clean manner. That's an example of clearly gotten out of hand for this guy. So he needed us to help with that.
Good problem to have. And so you can have multiple streams of income and still file. Is it like under one LLC, or does someone have multiple LLCs?
So that depends. So typically you're supposed to do one LLC per business type. If they're related enough, then you can do it under the same LLC.
Mhm.
For example, there's someone who they're not a coaching business, but they do like a consulting for medical companies. That's her main source of income. Uh, but then she also has 2 other revenue lines. One is she has like this website where she does like little she creates these little compliance forms for different medical professionals to use, and then she does her passion project, which is something in a very specific niche. So essentially, it's all under the same LLC. She make the most money from that first one, some money from the second one, and essentially use those to finance her passion project.
Oh yeah,
That's all part of the same LLC,
got
and
it. Okay.
Yeah, but in order to keep track of that, it's a lot of work, and that's why she has us do that part.
Yeah.
Yeah.
Well, multiple streams of income, great way to be building wealth too and diversifying so you're not reliant on just one source of income and be prepared for as the market changes, the economy. So that's great. Mayur, thank you so much for your time and generosity to share this incredibly valuable information with our community. Is there anything final you want to add to the group?
Yeah, no, I think that was most of it. But if they have any questions, I think they have my contact info. They'll free to reach out to me that way, or they can just ask you, Adina, and you can pass it along. And yeah, I
Yeah,
think
where
that.
can people find you and follow you?
Oh, right. Yeah. So our firm name is Finconoso. It's Finconoso. You can find us on Facebook, Instagram, LinkedIn, our main places. We have a YouTube page where I need to get our stuff back on there. But yeah, no. So those are that's the easiest way to find us. Then my information is linked through all of those as well. If it's not me, someone from our team regularly checks all that stuff, especially now during tax season.
Oh yeah, I'm sure you're busy. Well, thank you especially for making the time during the start of tax season. Several people are saying thank you in the comments. So thanks again from the bottom of our hearts to immigrant finance and our community. We really appreciate having this knowledge. So thank you and have a great night.
All right. Thank you.
Okay, thanks.